All right, let's look at the Chicago Tribune. Smug Obama administration duped the public. I totally agree with this. This article, written by a University of Chicago professor, basically is saying that the Obama administration lied when it came to healthcare, especially with the video of this Paige Schill, this MIT professor, Jonathan Gruber, right, who said that the healthcare bill passed because it was easy to dupe the American public. This is what this guy said and had the audacity to tell people. So it actually comes out that this limousine liberal told this to individuals. It leaked out, and there you go. It's making the Obama administration look bad because they knew that this would be a mess. And anyone who understands basic economics could realize that when you passed that healthcare bill in 2009, when you increased the demand without increasing the amount of supply of physicians, etc., doctors, you name it, clinics, the prices are going to go up. Putting that aside, sure, we need healthcare reform, but this bill would do nothing to control costs. So why am I bringing this up? Well, I want to look at the demise of Obama compared to the demise of other US presidents and try to look at the forex markets, or let's look at the dollar index and how it played out for a few presidents that have had notoriously bad reputations. Okay, so if you look at this dollar index chart, and from the 1970s to the early 1980s, we saw depreciation in the value of the dollar. And once again, the dollar index is flawed to begin with. I mean, this basket of fiat-based currencies, but this was in the 1970s, so different time frame, even though at times the dollar index has been sometimes close to what it is now. The reality is, right now, inflation has totally decimated the middle class. That's a fact. If you want to look at this over here, Jimmy Carter was president in like 1976, around that time frame. Left office in 1980. But what you notice is that in 1976, the dollar, the top was around like 108 based on this chart I made. So if you want to look at this, like 108. Okay, I'll take the calculator away. And then now I want to go to point where he was looked upon as a weak president, or a president that didn't have that much confidence, or the public lost confidence in the president. And you notice that as the Middle East events were happening, the dollar began to sell, and sure, there were inflation, expectations were much higher. The dollar index went to 85, okay? So 85, and this was despite interest rates going up. So this is what was happening to the dollar. And Paul Volcker, thank God, raised interest rates. Otherwise, we would have had hyperinflation. But anyways, it was like a 22% reduction in the dollar index. That doesn't seem a lot, but if you look at the economy back then, it was brutal. So if you look at from Jimmy Carter's reign, you saw the lack of confidence in Jimmy Carter. You saw the dollar index sell off. And as a result, you had more inflation, and the economy was anemic. And there you go. He left on a poor note. So we noticed that, okay, less confidence in this president, dollar index went down. Gold prices actually went up. Now, you want to look at 2008 now, with George Bush, or the era of George Bush, another president, or how should I say it? The public did not have that much confidence in Bush towards the end. Okay, so if you want to look at this over here, Bush, when he came into office, right, he inherited obviously a weaker economy because of the tech boom, and then there was 9/11. And right after 9/11, you saw the dollar appreciate to like 120-ish, right? And then slowly but steadily over time, the economy started to struggle, right? So over a 10-year span, you saw, not 10-year span, like a 6 7 year span, the dollar index depreciated significantly. So it was 120 and it went to all the way to 70-ish. Okay, so if you do the math over here, so it's like a 42% decrease towards the low of the dollar. And the dollar did rise right after July 2008, by the way. I was just looking at towards the low. Because if you remember Lehman Brothers crash, you had excuse me, a deflationary spiral. So let's put that into consideration. But anyways, George Bush was hated by the public. A lot of loss of confidence in this president. And then all of a sudden you saw the dollar start to slide. It happened over a period of a long time. And also you have to remember that, yes, you did have the economy booming during that time frame. And then since we were running these trade deficits, economy booming, right, the dollar gradually sold off. Right now, we live in an era where the rest of the world is weak. The rest of the world is economically weak. Then guess what? The dollar is going to be stronger than what it should be. But there's no strong dollar. People are saying king dollar is back, this and that. Well, if we do have a strong dollar, then people should explain to me why tuition costs continue to skyrocket, why health premiums will be skyrocketing in the years to come. I noticed that my healthcare plan is going to increase 20% next year, right? Prices, they really didn't go up if you work for a big firm, but then until this year, the price increases will happen right after the election. What a coincidence. But if you want to look at Obama, he is losing confidence within the public or among the public. However, what I see differently is I don't see or what we could see differently is the dollar may necessarily appreciate. It doesn't have to go down like it is right now. I mean, I've given scenarios where we could see the dollar go down, but this time around, I could show you that confidence will be lower of Obama, but we could see actually a higher dollar index. And I could show you why, which sounds really strange, right? But here's my thought process for this. Okay, so here is the dollar index roughly for the last 4 or 5 years. And I showed you the other day that this appears to be a crowded trade as of this moment. And I'm going to give you a different perspective today about the dollar index. Despite it being crowded today, you could have a small pullback. And then here's the situation going on in Japan. Japan has a 10% weighting, or the Japanese yen has a 10% weighting in the Dixie index. Remember, the US dollar is a basket of fiat-based currencies. So if the dollar yen not appreciates, but if it goes from 116, where it is right now approximately, to 140, that would put upward pressure on the dollar, since, once again, the dollar is a basket of fiat-based currencies. But what could negate the yen weakness is if the euro starts to appreciate against the dollar. Remember, the euro consists of around 57% of the US dollar index. So the euro appreciates, dollar is going to go down, and it consists significantly a large part of the dollar index. So once again, people are saying that king dollar is back. Sure, if you're trading the forex market, but if you're looking at other prices besides oil and commodities, if you're looking at healthcare prices, you're looking at student loan prices, and anything that's subsidized by the government, you're not seeing lower prices. I mean, car prices are higher. So people that are saying that you have deflation, in one regard, you could have deflation if you're looking at certain segments or certain prices, sure. But if you're looking at other prices, you have inflation way above 1%, way above 5%, way above 10%. So those individuals A, are not paying for the health care, or B, what they're doing is they're just looking at government statistics and making their decisions off that way. But regardless of that fact, what we do know is that you have Obama leaving in a few years. And what the ironic part is that if the Japanese yen weakens against the dollar, the euro weakens against the dollar index is going to go up, while Obama's confidence rating is going to go down. His approval rating is going to go down, which is quite different than what I showed you right over here. Right? Remember this graph where the dollar index hit 70? Bush's approval rating was going down. If you want to look at Jimmy Carter, right? The dollar index went down while he had a low approval rating. So what's really strange is that even though Obama may be, I wouldn't say a bumbling idiot, but really sleazy and narcissistic, or you could call him, I don't know what the best way actually is to describe this guy. He just is a rebel. You could put it in that way. And Americans are turning against him, and foreign leaders are turning against him as well, because he's no different than any other American politician. You could say that he's among the worst out there. And I could put George Bush in that category as well, and Nixon out there as well. Putting all these things together, right, you could see dollar go up, long story short, and then the presidential approval going down. And then if you want to look at other markets like gold, silver, right? Normally you'd think that, okay, dollar would go up, but if the world is losing confidence in all these fiat currencies except the dollar, but at the same time they're losing faith in US in general, you could actually see gold rally. I mean, I've given different scenarios that stronger dollar could mean that lower gold prices. Sure. But in some deflationary events, you have seen gold rally. But it's not going to go to $5,000 an ounce, in my opinion, if you see a deflationary head fake spiral. We could be in that deflationary head fake process right now. I mean, look at the price of oil as of right now. Even though I do see higher oil prices, but before we do, I was always talking about this deflationary head fake. Since the dollar index is the world reserve currency, and since everyone else is having a tough time. Anyways, guys, thanks for listening. I'll talk to you perhaps next week.